What we think is going on right now on a short-term basis, silver just crossed some numbers today that look pretty good, that indicate to us they might get to a really key level. And for silver, our really key level is just a ballpark at around $24.50. We're trading $23.60 right now. You close the week out around 24.5, and we think silver is ready to launch. And it will join what gold said in November when it went through some key levels and has remained above them basically since then. Silver will join in, and I think when that occurs, it's at that point that the miners in particular will flower, okay? Will start to perform well.
Right.
Anyway, we're getting close, I think.
Yeah, so I know you needed to see silver confirm the move in gold, and it didn't happen the first time. So this is a very...
It stopped $0.015 short of our number.
Well, it's looking very strong. I mean, the last I looked, it was up some 50 cents today. So silver's having a great day. What about the miners, Michael, with just about 30 seconds left here?
Okay, the real key thing on the miners is, one, if silver does cross our numbers, again, ballpark at around 24.5 on a weekly close, the miners will likely then engage. They're laggards. They're like a slingshot. They go real low when you go down, and then they flip-flop, and they're extremely powerful on the upside. What we're watching on the miners right now is a very interesting spread relationship between the GDX ETF and the S&P 500. And it looks to us like that spread relationship, meaning the relative performance of miners versus the broad stock market, is bottoming. And it won't take a lot in terms of a good weekly close on that spread for us to declare, okay, the spread is shifted, miners are now going to outperform the S&P again. The last time we had such a signal based on momentum was about about 1 month after that March low in 2020. Remember when they bagged the gold miners? And they flipped up sharply. The spread broke out, and not only did the spread perform well, it beat the S&P for the next 4 or 5 months dramatically, but net price of GDX exploded. We think we're in a similar situation now. We're not at the numbers yet, but it wouldn't take a heck of a lot of relative performance shift favoring the miners to then outperform the S&P going forward, which could be a combination of two things. One, S&P decline, and also gold miners going up, which is our suspicion of how it'll turn out. But we're very close to that point right now. I know there's a lot of fundamental metrics that argue what you just said, but the U.S. market is definitely overvalued by this metric or that metric, and I agree. From a technical perspective, especially measuring the long-term momentum of the market, we've described it as the biggest bubble ever in the stock market history. And big bubbles break, okay, period, exclamation point. We think the Fed, which created the bubble, will also break the bubble, and they're probably on course to do that since June, when they started talking about tapering and now rate increases. And so their favorite markets that they supported and outright bought over the last year and a half, up to summer of this year anyway, like muni bond futures, muni bond ETFs, high yield corporate debt ETFs. They literally bought these things outright to support them. And now they've ceased, and these markets are now taking out the lows of the last year and a half, the muni bonds, for example, whereas the S&P is just coming off its high. We think that the stock market, what we primarily focus on, aside from a few key stocks, Microsoft, Amazon, and Apple, we think as those three go, the world goes, okay? But we also look at the S&P 500 and NASDAQ 100, and they're fracturing certain levels. We won't put up the full red light yet, but they're definitely dancing on top of glass, and it looks like they're ready to go through it. We don't think there's going to be a crash-like event like we had in early 2020, where we dropped 35% in 3 weeks, and our definition of a crash is about that. That's what happened in 29, that's what happened in 87. It was of the 30-35% dimension in weeks. What we're looking for is a major top signaled, and we have our numbers very specific, and they're not far below. And if they're triggered, we think we'll have the onset probably of a first drop being of the dimension of, maybe 20%. And it's an idiot number, because so many people believe in that issue of, if it's more than 20%, it's a bear market. It's so silly. I don't know where they come up with that number. But anyway, it happens to be that we think that the first bounce point is about 20% below here. Now, if that occurred, of course, extreme doubt would sweep the markets. A lot of asset managers who've been very doubtful, like Ray Dalios of the world and so forth, will say, I told you. Okay, and a lot of the younger asset managers who were, all glib and happy will suddenly get some sense of reality. And the Fed will get a sense of reality. So this notion of we're going to raise rates, well, look what's happened just over the last, let's say, several weeks. They're going to raise rates, right? Okay? So what's happened? The Bloomberg Commodity Index from the December low about 4 weeks ago has rallied over 10%.
Wow.
Okay? So it's not intimidated by the Fed. Okay? Meanwhile, the NASDAQ 100 has dropped almost that much since the high of 3 weeks ago. So which market is most vulnerable to the Fed wanting to, quote, stop inflation? They've never wanted to really stop inflation because if you look at the history of it, since 2008 and 9 when they went into the QE stuff, they inflated. And inflation went into an area that was okay for them, stock market, muni bonds, junk debt, and so forth. That was acceptable, quote, inflation. But then when commodities start to turn up, after being smashed for, since the 2011 highs, Bloomberg Commodity Index was up at 180 something. It dropped to about 50. Right now it's only at 104, so it's hardly, it's not even back to the 2011 highs, and yet they want to smash it. Well, the problem is what they're going to smash is their own bubble. And I think gold knows that. And it knows that ultimately the central banks of the Western world, including Japan, ECB, BOJ, and the Fed, will at some point have to give up any notion of fighting inflation in the manner which they're talking about, because it's going to destroy their bubbles.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.